Hello everyone, welcome to Educare 247. This is the 10th lecture of current events and developmental issues. This topic is very much important for upcoming UPSC EPFO 2020 examination. Educare 247 has started lecture series on all the topics mentioned in EPFO 2020 syllabus. In our 10th lecture, we are discussing RBI's liquidity offer for mutual funds, and this topic is very much important for your exam. Educare 247 has launched UPSC EPFO 2020 comprehensive course. In this comprehensive course, we are providing notes, MCQs, video lecture and 12 full-length mock test. Currently, we are running a discount. You can use EPFO coupon code to get 1000 rupees discount. The whole world is locked down, so it will be a lockdown learning. At your home you can study, your study should not be hampered. That's why we are running a discount, so you can subscribe to EPFO course. It will be very useful for your upcoming examination. Recently, Reserve Bank of India has announced a special liquidity window of rupees 50,000 crore to bail out mutual funds. They are very much hit by the slow economic growth. This is very technical concept. Try to understand carefully. Under the special liquidity facility for mutual fund SLF-MF, the RBI will conduct repo operation of 90 days tenure at fixed rate for banks. So what will happen? RBI will provide money to banks at repo rate, and that money bank can lend to mutual funds. So it is called repo operation, and it is kind of repurchase agreement. Basically, it is a short-term agreement to sell securities in order to buy them back at slightly higher price. The online selling of repo is effectively borrowing, that is bank, and other party, that is lending, that is RBI. So this is the whole concept. This scheme is available from 27th April to May 11. So in between, bank can bid for the amount and RBI will review later the timeline and the amount also, depending upon the market condition. So this is the overall liquidity offer for the mutual funds. We'll discuss the detail of these provisions. SLF-MF will be used by banks exclusively for meeting the liquidity requirements of mutual fund. So this fund is exclusive for the mutual fund. Under the SLF-MF, bank can extend loan to mutual funds and undertake outright purchase of and repos against the collateral of investment grade corporate bonds, commercial papers, debentures, certificate of deposit held by the mutual fund. And what are the features of this offer? RBI said liquidity support availed under SLF-MF would be eligible to classified as held to maturity. So this is also very important point. The support extended to mutual funds under SLF-MF shall be exempted from bank's capital market exposure limit, and exposure under this facility would not be counted under the large exposure framework. So these are the important features of this offer. So must remember these important points. This is the third time RBI is opening the liquidity window for the financial sector players in the last 15 years. In the crisis of 2008, RBI opened the window, and again in July 2013, RBI opened the special liquidity repo window, because that time there was sharp drop in mutual fund returns, and this is the third time RBI is opening that window. Basically, nowadays there is so much volatility in the capital market, and it intensified the stress on mutual funds. People are redeeming their mutual funds, so they have liquidity crisis. They have to pay to the people. So that's the whole problem. And what will be the outcome of this decision? Basically, it will pump some liquidity, and it will boost investor confidence in the mutual fund industry, and it will also bring some degree of comfort in debt market, which is under huge redemption. I mean paying back pressure. People are selling their stocks, so that can be reduced if liquidity will be pumped. Let us understand some important term. What is mutual fund? Mutual fund collects money from the investors and invests the money on their behalf in securities, and it can invest in debt and equity, both the securities, and it charges a small fee for managing the money. And what is debt fund? It aims to generate return for investor by investing their money in the avenues like bond and other fixed income securities. So in debt fund, generally they invest in the fixed income securities. And what is credit risk fund? These are the debt funds which have at least 65% of their investment in less than AA rated fund. So this is also very important. And held to maturity securities are purchased to be owned until the maturity. It's like bond. So these are the important terms you must remember. It can be asked in your examination. Hope you have enjoyed the video. If you have enjoyed the video, like, share and comment and subscribe to Educare 247 for further updates. Thank you and keep learning and stay home, stay safe, because right now corona crisis is going on and you should not move out.